Hey guys, what's going on, and welcome to this market structure video. Yeah, let's get right into it. So in this one, there's going to be a lot of value, so please be ready, and take notes. So we're gonna look at different, time frames, okay, substructure within the overall structure, which phases are there in the market, and how can you combine that, with support and resistance levels. And we're gonna look at also a different trade opportunities. So yeah, let's get right into it. So in the market we have four phases. Okay, so firstly we have this markup phase. Okay, and what is happening, so basically the market is making higher highs. So this is a higher high, the market pulls back and makes a higher low. Okay, this is potentially a trade opportunity. Okay, but we're going to dive deeper into that soon. Market then came back up, made a higher high again. Okay, so this is another higher high, another higher low, but then the market failed to make another higher high. So basically this is a strong daily resistance, okay, which is preventing the market to push through and potentially make another higher high. So what did the market do? It created this consolidation, or you can say also distribution zone. Okay, for example, positions that were opened, okay, potentially in this area right here, they are closed in this distribution area. So let me also note that this is going to usually occur, okay, at a strong daily resistance. So potentially if I pull out my line, okay, this could be a strong daily resistance which is preventing the market to push through and make a higher high. And when this happens, okay, let's say that this whole scenario, okay, is on the 4-hour chart. Okay, this is a 4-hour chart. And what then happens? So from this rejection at the resistance level, the market pushes to the downside, so breaks the previous lower high. So this right here, this would be a break of structure right at this moment. Okay, why? Because the market broke the higher low. So break of structure, BOS means break of structure, came back down and formed a new lower low. Okay, so the market is now trending to the downside. Okay, lower low, and this is a markdown phase. So markdown or downtrend is the same thing, just a different term. And what the market then does, so it pullbacks to where? Back to the support or the higher low which was created right here. So this was the higher low, the previous one, and then this support, okay, got broken here and retested, so it acts like a resistance. So this is potentially how you can take advantage of this downtrend and support, and you could take the trade right here. Okay, of course you can make more accurate trades. I'm gonna show this in a second, basically how to take advantage of substructure within that structure. Okay, then the market came back down, okay, printed another lower low, okay, and stopped at this daily support. So it's the same as here, daily resistance. Okay, the market stopped at the daily support. Okay, is it smart to maybe consider taking a trade right here? This will be a lower high again, so the lower high. Not really. Why? Because the market has, in terms of probabilities, okay, higher chance of from here bouncing and making a huge move because it bounced from a strong support. Okay, so technically these are the type of trades that you want to be in. Okay, when the market bounced from a daily resistance, printed a lower low, pull back to a lower high, touched also the the previous support which acts like a resistance now, and came back down. So when you technically touch a daily support here, it's less likely, okay, it's less likely in terms of probabilities, then this trade will play out as it did. Okay, so the market came to this level, created a support. Okay, and as you can see, this is a range. So this means that the market is failing, okay, to create a higher high or a higher low. So it's ranging, and basically if there was any positions from this lower high to the downside, this could be a good profit taking area on this daily support. Okay, so at the moment this is accumulating, okay, and basically we need to see a break of this structure to either side, either to the upside, so this will be a higher high, okay, or to the downside for a higher low, for a lower low. So what the market then does, okay, let's assume that the market bounced to the upside, and at this moment, okay, this lower high was broken, so this is a new higher high. So we are simply waiting for the market to pull back. Okay, it could pull back to, you know, this resistance, now acting like a support. Okay, it could pull back lower, but this is a higher low and then another higher high, and you know, this is the next uptrend. Okay, so simple as that. So basically at this moment right here, okay, this will be our, you know, higher high right here. Okay, so let me mark it up. Higher high, higher low. So let's mark it up. Higher low, and this is the uptrend again. So markup phase. Okay, so higher high and higher low and another higher high. Okay, so you want to take advantage of these phases. Okay, in an uptrend, basically you want to take advantage of higher lows, take the trades here. In a downtrend, of course, lower highs. In the, you know, accumulation or, you know, distribution phases, you don't want to be involved. What I do personally, I mark it up like this. So like this. Okay, this means that there is no trading. I'll wait for a break of structure, the same as here. Then the market lower low, lower high, decent trade, pull back to the downside. Okay, and again, accumulation phase, what do? I personally just mark it up like this, so I don't get, you know, baited in any trades. There's no structure that I want to be involved. Okay, and then the market pulls back, makes a higher high. Okay, and then potentially on the higher low, there's a potential that you can, you know, take some trades to the upside. Okay, hopefully this makes sense. Okay, so this is a 4-hour chart, for example. Of course, we're going to look for some chart examples in a second. Okay, this is a 4-hour time frame, but what you can do, okay, you can also take advantage of lower time frame structure within that overall structure. So this is going to be a little more advanced, but let's say that this, okay, is H4 time frame. Okay, H4 time frame, and within that we're gonna look at 1-hour time frame, so 1-hour structure. So let me mark it up. I'm gonna make this line a little less thick, so it's gonna be easier to see, like this, and maybe with blue. Okay, so let's see how this would look on the 1-hour time frame. So within that 4-hour push, the 1 hour will do something like this: higher high, higher low, higher high, higher low, and higher high. Okay, can you take these trades here and here? Yes, of course, but I'm gonna show you what is the highest probability trade. Okay, then the market, you know, pullbacks, you know, just making waves within that overall structure. So this, okay, is a higher high on the 1-hour time frame. Okay, can you take a trade? Maybe if we see this 1-hour support and resistance right here, because this is the break of structure moment, okay, on the 1 hour, and the 4-hour structure is making higher high and higher low. So this is within the range, within the trend. So potentially if price pulls back right here, we have, you know, we are trading within the 4-hour structure, and basically we're taking advantage of lower structure, so substructure within that. And also, as we can see here, we have this head and shoulder pattern, which we, you know, can use extra confluence. Okay, but this would be a decent trade. So for example, if I put my, you know, buy tool right here, it's also going to be easier to limit your risk, because you can simply put your stop loss below the higher low. So your risk, you know, your risk is limited. Simple as that. Okay, and you can target maybe this daily resistance, okay, at the top, this level right here. So this is how you can take advantage of substructure. So you're trading the 1-hour break of structure. So this is a break of structure, higher high and higher low on the 1 hour. Okay, so you're getting a better risk to reward. Okay, and then the market potentially pulls back, makes some higher high, higher low, higher low. Okay, so this is one opportunity, and then we have this distribution area around the daily resistance. And what do we wait for? Ideally this lower low, which is a 4-hour break of structure. Okay, you can of course go to lower time frames and, you know, take advantage of opportunities here, but I'm gonna show you the highest probability. Okay, so market came back up, so it made this lower low, so lower high right here. Okay, which of course was respected in the past. As we can see, one touch, second, third, fourth. So this is a good confluence, okay? And what you can then do to take the highest probability trade, okay, in this markdown phase, you can simply wait for a 1 hour break of structure. So 1 hour higher low was broken here, it pullbacks again, okay, right here, and this will be the ideal scenario to take this short, okay, because we're in a markdown phase, okay. 4 hour structure was broken right here with this lower low, okay, and then entry right here with the stop limited just above this resistance, okay. What you can also do, maybe look for some stop hunt wicks in the past, so you can put it a little above. So maybe if market wants to stop hunt, okay, you're still in the trade, that's of course a possibility, but this will be a much better trade just to take, you know, this one, because if you're taking the 4 hour trade without looking at the 1 hour, this trade would have to be, stop loss would have to be above the daily resistance, okay. So your risk to reward will be much lower, as you can see, almost 1 to 1, and here you have 3 to 1 if you look at substructure. So this is the power of understanding, you know, substructure within the overall trend. So hopefully, you know, this is not too complicated for you. If you have any questions about, you know, what I'm talking about here, you know, feel free to, you know, let me know in the comments and ask away. So basically the idea, okay, you're taking this position in this markdown phase, and of course target could be low, the daily support, okay, and of course you can take profits along the way, but this is just, you know, the logic of market structure. And then the same scenario occurs, okay, we're basically touching this daily support. If I zoom out, okay, it's the same as here. And what are we waiting for? We are simply waiting for a break of structure. So with this higher high, of course the 1 hour within that 4 hour is making waves, so something like this, okay. Oops, one, so right here, okay, and after this higher high we can look to potentially take this higher low, okay. And how can we do that? Okay, so we need somewhat a break of structure on the 1 hour. So if I look at market structure right there, okay, we would need this to make a higher high on the 1 hour. So basically this is a break of structure, okay, and then a pullback back below higher low, okay, and take the trade here, okay. Where is this going to pull back? I personally like to wait for the 88.6 retracement ideally. So if I pull out my Fibonacci's 88.6, because the market will naturally, okay, gravitate towards grabbing liquidity from 38, 0.5, 61.8, okay, and then pull back down and push the market from deeper retracements. So of course this goes, you know, by trader's choice, you know, feel free to, you know, use it however you like, but I would do something like this. If you want to be on the safe side, you can put stop loss below the 1 hour higher low, or you can just put it below here. So here, where is your target? Of course, first target will be this equal highs right here. Then maybe this resistance could be extended, okay. So this is the second target, and maybe the last target will be above. But as you can see, your risk to reward, you know, is much better simply by looking at substructure within that overall 4 hour trend. So yeah, hopefully, you know, this makes sense to you, okay. And right now let's go to the chart and let's look at a few examples and, you know, take this into practice. So hopefully this was useful. If not, you know, don't, you know, hesitate and ask your questions in the comments below. So yeah, see you on the charts. Hey guys, before we move on with the charts, okay, the funded trader prop firm, okay, was kind enough to give us one, okay, 50k account for free. So basically we're giving it away to our audience, okay, to celebrate 150k Instagram followers, okay. So pretty cool. So how can you win that? Okay, simply tell us why in the comments below. Why should you, you know, get this account? Why would you need it? You know, why do you deserve it? Okay, and basically the best comment is going to win, okay, this free 50k challenge account. So yeah, good luck, and, you know, convince us with your comment below, and we're picking the winner in the next week. Cheers guys. Alright guys, so now it's time that we look at the chart examples, okay, and see how you can, take advantage of this type of movements, okay, in market structure on the real chart. Okay, so we're gonna start right here. So of course this is 1 hour time frame, this is fractal, so this works on 4 hour, daily, weekly, and so on and so forth. Also, let me note, the stronger the time frame, okay, the better the confirmation. Okay, so keep that in mind at all times. Okay, so if you look at this chart right here, okay, this is consolidation. Okay, why? Because the market is failing to make a higher high or a lower low. Okay, so after that, okay, we see that the market made this push right here. So this is a higher high, right? So if this is a higher high, the market is now trending to the upside, okay, on the H1 time frame. Of course, the 4 hour daily could be bullish, bearish, whatever, but ideally you would want 4 hour and the daily to be in synchronization with 1 hour, so basically to the upside. So this move could be just a simple move right here within the 4 hour, right? The same as we were talking about before. So this will give you a higher probability. So, but if we keep it simple, you'll see that when this made a higher high, the market came back down, made a higher low. Okay, and because it made a higher low, you can see how this structure was basically retested. So the previous resistance, okay, now became support. So this became support. Okay, from this support the market pushed to the upside, okay, made an equal high. So there was no higher high because technically it was, because we were measuring the bodies. Okay, so this body was higher than the previous one, but this is all within the same area, so this is not measuring a new higher high. So price failed to make a higher high, okay, it made an equal high. So this right here in terms of structure would mean equal high. So equal high right here. Okay, after that, okay, the market pulled back down, made a higher low, and then pushed to the upside to make another, higher high right here. So the market is trending to the upside, and it's the same thing. Okay, this came back down, okay, and made another, higher low. Market came back up, make a higher high, and so on and so forth. But here we can see, okay, that once the market created this higher high, it failed to make another higher low and the higher high. But what it did, okay, here it made equal lows right here, but then the market, okay, with this move broke structure. So all these bullish structures, so the market here, okay, was basically bullish. So higher highs, higher lows, higher highs, higher lows. Okay, but with this push the market basically created a new lower low on the 1 hour time frame. So it broke this previous higher low, and this is a break of structure. So right here, okay, the structure was broken. Okay, so let me mark it up so we can do BOS. So break of structure, okay, and the market created a new lower low. Okay, so if the market created a lower low, now we're not going to look for buy opportunities, but we're going to look for sell opportunities right here. Okay, so lower low, the market pull back, okay, and make a lower high. So this would be the time to go short. Okay, so the structure was broken. If I continue with here, this would look something like this. Okay, a lower high. And if we look at previous highs, we can find this resistance, which now becomes support. Okay, and this is how you can take advantage of this structure. So this will be a decent trade opportunity right here. Also, you can do maybe a pull out your Fibonacci tool from the high to the low, and you will get a 61.8. Okay, this is combining it with structure. So another confluence. Okay, maybe you have a moving average or whatever you have, a trend line, so you can add confluences here. But this will be a good moment. So this moment is the same as this moment, so lower high, that you can potentially look to take to another lower low, which of course occurred right here. Okay, so hopefully this makes sense. So how you would enter this trade, for example, right here, stops could go just above this structure, or to be on the safe side, even above the previous wicks. Okay, and target could be, I'm not going to go into targets in this video, so we keep it simple. But this is how you can follow this downtrend shift basically with after this break of structure right here. Okay, So let's erase some of the things. Okay, after this lower low, you can see that the market came back up, okay, made an equal high again. Okay, so another equal high, because it was not, the lower high was not broken, okay, but it came to the same point. Okay, and then the market made another equal low. So why is this equal low? Because this structure didn't go below, okay, the previous lower low. So this can be taken, of course, but ideally you would want a lower low like this. And if we wait, you'll see that the lower low was formed right here. So the price went lower than the previous one, and the price simply, okay, retested this, okay, support right here. So this support became resistance right here, and this is what the market is doing over and over and over again. You can of course stack influences here with some moving averages, so potentially also a fib from the high to the low. I believe this will line up with the 50 or the 38.2, okay, right on the 38.2 Fibonacci. Okay, so we have two confluences, resistance and the fib, and you can do this, over and over. Okay, so we can also mark it up because this is all liquidity. Okay, the market did the same here. So basically this is a lower high, okay, then the market came back down, made a lower low and another lower high, so another retest of this resistance. Also we can pull out the fib again, okay, and this will be around 78.6 fib, I believe, or 88.6. So 88.6 fib ideally. So another trade opportunity right here, and then the market did the same thing, lower low, lower high. Okay, hey guys, so the video got cut for some reason, but let me just do a quick recap of what we went through in this video. So here you have the terms. So the green boxes are the higher highs and higher lows, the red lower lows and lower highs, and the yellow no structure. So one thing that I want to emphasize, basically two things. So when the market makes a higher high, I would advise, dropping like a support or resistance line right here. Why? Because it might be retested in the future. So if we take a look, higher high, okay, higher low, okay, this is a higher low right here. Market came back up, okay, made a higher high, but failed to create a higher low and then the higher high. So basically it created a lower low right here. So this is the break of structure, and the previous higher high, as you can see, was retested, basically act like a resistance again. So this will happen over and over again, and if you just extend this, higher highs and higher lows and make it like a resistance area, you will see on your chart when you look at it, okay, do it like this, okay, extend it like this, okay, this will become support and resistance over and over again. So you can use that in your advantage. So lower low, lower high, of course, resistance retest, lower low, lower high, retested again. So this was the previous higher high and the previous higher low. So this acts as a confluence, okay, price came back down, so fails to create any highs, any lows. So this is a consolidation, okay, or accumulation phase. After that, price came back up, okay, makes a higher high, higher low. Of course, this is not going to always touch, a support or resistance. Makes a higher high, higher low, and this higher low was stopped where? At the previous higher low, at the previous higher high. So this all acts as confluence for your trade to take it to the upside. So keep that in mind. Always draw this, resistance and support lines on the higher high, higher low points, so or the lower low, lower high. So important points, because you might use them in the future. And also let me note that, the stronger the move, so basically this is a strong move when price came here, exploded to the downside. So this is a strong move. So this means that this has a higher potential, that price when potentially comes back here, that it makes a stronger move. So the stronger the move from a support or a resistance, okay, the stronger the potential next move will be in the future. So yeah, this is just a brief, introduction, so, and a recap of, what we went through. So hopefully, you find value in this video. So, take notes, because this is important. With structure, you're going to be able to take much higher probability trades. So yeah guys, so hopefully you enjoyed this video, and we'll see you in the next one. Cheers.